Alrighty, hello and welcome traders. It is Monday, February 26th, 2024. We're going to mix things up today. We're going to go first into the account, then we'll jump into the markets and see what we're looking at for potential trades tomorrow. So let's just run through today. Ended today with a delta of minus 0.12, so you can't get closer to zero than that right now. So we're at zero delta, so we're super delta neutral on the overall portfolio. So happy to be there and loving being delta neutral right now when the market's up, down, doesn't really know which way to go. We're not overexposed one direction or another. Theta is at 1070.24, a little bit light on theta, but overall it's not too bad considering the environment that we're in. So we'll take it. We're making $1,000 a day. If we continue to have a theta of 1070, we'll be in pretty good shape. Technically, you would think that that would be $5,000 a week, even though you only keep a portion of that typically. Maybe 50% of that actually turns into what you're keeping, or maybe a third of it, something like that. Other than that, I'll take $300 a day right now, or $330 a day. That'd be $1,665 a week, 52 weeks a year, making some decent money. However, we expect to make more than that. So that's just the foundation of what we do. Net lick today jumped nicely, a huge day today, up $4,000 overall on the session. One of our largest up days that we've had. We hit a new record high, $439,089. So almost 440,000. We are up for the year right now, up for the year, almost $45,000, $46,000 on the year. So we're in pretty good shape, like where we are, $45,000 this year on a less than $400,000 account when we started in January. So we're doing really, really well. Love where we are. Our BP usage today, end of day, 272. We did add a little bit to our bill position as well, heading into the end of the month, where we'll get a distribution coming for next month. So because the account has risen a bit, in fact, we started this month at 415. So we have put on what, $25,000 almost in net lick gains. So that's pretty good for the month. $23,000 right now in net lick gains. I'm sorry, I keep saying that. So we increased our bill to keep around that 10% mark. Our buying power without bill in it for just trading is at 52%. So we're really right at that 50% level that we'd like to be. So we're sitting perfect. Our delta is exactly where we want it, super delta neutral. Theta might be a tad light, but still pretty good overall. And buying power is right really at that 50% mark that we want to be, and we're hitting new all-time highs seemingly on a daily basis. So we're pretty happy with where things are overall. For the month, we have now booked $19,935 in realized gains. For the month, which is at 4.8%. So again, we're way over our monthly target of 3%. And if we look down here just to see where we're doing, our goal for the month was $12,000. Last month, we blew our goal away by $9,500. This month, we're already ahead of our goal by $7,500. So overall, we're $17,000 ahead of goal. We've almost not quite doubled our plan so far for this year. Do I expect that to continue? Probably not, but I wouldn't be surprised. We're not doing anything crazy. We're not jacking our buying power way up. We're not doing super risky trades. I think we're putting on pretty good trades with a good trade plan overall. So again, 19,995. Our net lick has increased 23,504 for the month. So we've put $23,000 in portfolio value on. Now, one of the courses that we've been doing with our members is a how to build your trade plan course. And when you're building a trade plan, one of the things we want you to start off with when you're starting to build your plan is you have to identify whether this is going to be an income account or a growth account. So income meaning, yeah, I need to be able to generate consistent monthly income out of it, or whether I just want to keep growing this account over and over and over. I don't need it for income at this point in time. This particular account is a growth account. So my only goal in this account is, I want consistent monthly income, but I'm here to grow this account. Not at all costs, not exceeding my risk management tools. I want to be right on the money with my goals, but I'm here to grow the account. I don't need this account for income right now. But if I did, it'd be generating, on average right now, we'd be generating about $12,000. I'm sorry, we'd be generating about $20,000 a month. So $240,000 a year in income, if that's what we wanted so far. That's what we're averaging. It's only 2 months in, so we'll see what happens. A lot of things can happen to knock this account down. Overall, last week was one of our best weeks of the year, 8,400. I think that was the best week of the entire year. Today was our second best trading day of all time. Last Thursday was the number one trading day we've had at all time, and we came doggone close to it, but didn't break it today. But it's nice to see that some of our largest trading days ever are starting to happen frequently, week after week. So we're in a good, a pretty good position right now. Overall, where is the money coming from? Well, our long-term 112s have generated almost $5,000 in cash. If we look at our strategy builder, my goal is about $8,000 in monthly cash from those, but I'm not sized up appropriately yet. The sizing is a little over 7 units a month, and right now we're trading pretty close to, I think it's 6 units a month. In fact, we can take a quick look. Down here, we can see some of our trades. We've been averaging 2 or 4 trades a month. So 2 trading in tranches of 2. We've got 1 more of those. Then we started to bulk up to 3s and now 4s for quantities. If we do 3, then 4, then 3, then 4, that'll give us our 7. But we're still closing stuff where we were only doing 2 tranches of trades or 2 contracts at a time. So 4. So we are still generating income where we want to be, but I'm going to get to a point where the long-term 112s are going to generate hopefully a little bit over $8,000 a month in cash as we get close to doubling that. So we're starting to see the plan really working out. I'm going to expect March to be similar. In March, I'm hoping to pull off another 2 tranche and a 3 tranche trade. So we'll start to move up, and then 6 tranches in April, and then by May and June we should start to see 7 tranches, and hopefully maybe by July or August about 8 contracts a month coming off. So you can see that we're going to go from 4 to 8 a month. We should be starting to double the revenue here. So we should start getting closer to that $8,000-9,000 a month in long-term 112 trades. You can see here on strangle trades, we have knocked it out of the park this month. We are up $9,600 on strangles, dividing them between oil, gold, bonds, copper. So far, we are really spreading these out among a variety of different underlyings. Some of the other 112 trades on. We've got a 112 trade in ES. We've got $1,000 in that. We've got over $5,000 in oil. And then some of the other trades, we have some of the put debit spreads coming off. So for a little bit of a loss right now on some other underlyings. Then really down here, ratio spreads are up. 0 DTE just down. And then, of course, hedges always down. Spec trades are up. 19,000. Last month was 21,000, which I thought was fantastic. It was almost $10,000 over plan. I wasn't expecting to get close, but we are right in the ballpark this month. So we'll see how things continue to go. But we've been hitting on all cylinders so far, knock on wood. We'll see how things continue to go, but we're sticking to our plans. You don't see any of the numbers that I'm showing you getting way out of whack here. One of the things I'm pretty happy with right now, too, is year to date, we're up 11%. Okay. So our net lick has grown 11% so far in the first 8 weeks of this year. And even though the markets have been really on fire, the S&P's up 7% this year. We are almost outdueling it by 50% or more, actually almost by 60%. We're beating the S&P so far for the year. If the S&P starts to sell off a bit, you should see us start to actually pound it into the dirt pretty heavily, because we really start to make more money if the markets start to drift downward. So we'll see what happens in the markets. But 11% on that lick, almost 11% in realized gains this year, and the S&P still having a really good year at 7%. We're at a typically normal year for the S&P that's up 10% for the whole year on average. We've done that now in 8 weeks. And we're not taking not risky trading stocks. We're not buying options. We're sticking to our premium selling, doing a good job. So anyway, I wanted to point some of these numbers out. And for 2 months in a row now, we've beat 5%, even though our goal is 3% a month. All right, so just gives you a little bit of sense of what that looks like. We take a quick look at the IRA today. Now the IRA hitting 240, 147. We did take a minimum required distribution out of 13,000 last Friday for the IRA that we're trading in this particular account. So that individual has to withdraw that money. And this is the trade that we're the trade portfolio that we're tracking in the Income Navigator service. So this IRA still doing fantastic. Overall, it's up 4%. Our goal is 1.5% a month in the IRA, which would be 18% a year. Right now, we're already up 4% in realized gains and up 3% for the year. So we're definitely right on the track for this thing. We're not trying to do the same things at 3% a month or whatever that we're doing in our trading account. This account is a little bit more conservative, a little bit more reserved, but we're on it. And I'm going to go back to our trade today. So where did we close these $4,700? So yep, IRAs are doing great. Let's take a look at what we closed for today. We had a bunch of trades come off. So I closed a lot of things. So first thing I closed here was the naked puts on a long-term 112. I also closed the short puts of the put debit spread, turning it into just one long put, a nice hedge. So I paid a little money to turn this whole trade. Once I took the naked puts, the short puts off, I got a long hedge, long put going. We closed a gold strangle. Now I closed this early. Our goal is 50%. I normally figure 30 days in the trade to 35 days, something like that. We were able to hit 35% in 7 days. Why would I hang in there to make 15% or risk any of this over the next 4 weeks or so? I'm going to close this. So if I can hit 35% in 7 days, that's a much better return than 50% in 30 days. So we're going to take that gold strangle off. Booked another $840 there. And then what did we do up here on bonds? We had actually a covered strangle in bonds. We took both of those off early. Normally, I would just let this go to expiration, but we were only 6 days in the trade. And we were able to take both of them off for right around 50% in 6 days. So instead of 100% in 30 days, because its original trade was a 31-day trade, why not take 50% in 6 days and start it all over again? So that's what we did. We closed it early and we started another one. All right, the next trade here is a strangle on bonds. We put this strangle on in bonds. Same thing here. It's a 94 DTE strangle. We were able to close it in 6 days for 20%. Again, my goal is 50% in about 30 days. Why not close something in roughly 1/5 of the time for 1/5 of the money? I'm sorry, for 20% instead of 50%. So we made 40% of our gains were made in 6 days. So it closed it in 1/20th the time, and we closed it for a pretty nice profit. So we took that off the table today. Also here, we had a put debit spread of our 112 trade in copper, just expired worthless, which is fine. So there's a little bit of a loss on the P&L piece. And then, but overall, a nice winner on the trade. And then we also took off a strangle. So we closed this early as well. We made almost our 50%, but I had the chance today to close it in 17 days at 47%. All right, so that's where we closed a bunch of stuff early today, and then we put all new trades back on. So we filled the buying power right back up with a whole bunch of new trades. So we're in good shape there. I've already covered the IRA with you guys, so you know where we are in the IRA. It's doing fantastic right now. And in the small account, we booked 373 bucks there. We are up 5% on the month in realized gains and 3.6% in net lick on the month. So this account doing just fine. We haven't traded it as actively as we probably could, but we did close the day at a new all-time high. We did put a bunch of trades back into this account. Our buying power still sits below 50. I mean, our buying power has just been too light, and we've just neglected getting enough trades on. I didn't want to put a lot of ES trades on. So we managed to get a bunch of new trades on today. We booked 373 bucks today in this account, and that came from number one. We closed the naked puts of a long-term 112, and we also closed a copper strangle early, 22% winner in just 6 days. You know, just book it, Dano, and we'll get it in there. So we'll take the realized gains for that. So 821 bucks for the month so far, over 5%. Goal is 3% a month. So we're in decent shape right now. We're pretty close to that 6% for the year, or that 3% a month. Net lick's down just fractionally to our goal, but we're fine. We'll catch that up now that we have buying power back in and running around. So we're in good shape on small account. We're in good shape on the IRA, and then our main portfolio is just absolutely killing it out there. All right, so there's where we are. I don't want to take too much time, go through the markets here today, but the S&P dropped 20 bucks overall. I'm sorry, the SPX dropped 20 bucks, or down to $1.86, 0.37%. Small down day. Doesn't mean a thing anywhere. Right now, you are overbought on the weekly, so any pullback here would be warranted. The squeeze on the weekly, way too long in the tooth. I expect us to have some sort of a pullback here. I'd really like to get a pullback on the weekly to the 21 EMA. Don't know if we'll get that. We'll worry about getting to at least the 9 EMA first, somewhere around the $500 mark. And then maybe we can get down to the 475 or so here. That would also correspond to about the 50 moving average here, somewhere in that 480, 45 range. So extending this out overall, still in a nice uptrend, bullish PSAR. You got MACD been trying to move higher, but really just a lot of sideways movement here. And then this recent high that we hit on Friday, and we can adjust this because this should be 510.13. Okay, that's our all-time high. We're just off of that by one session, but this new all-time high on Friday did not see new all-time highs in the RSI. So a little divergence here. I think we're in for a little bit of a pullback. I'm not saying the market's going to crash anytime soon. We're okay if it comes down pretty decently, but I think we just get a nice little pullback potentially, and then maybe the next leg. But I would expect some decent pullback on its way. The Qs, pretty much the same thing. You're flirting with the 3 ATR levels here on the weekly, and you were a little bit overbought. Now it's trying to head down, but the daily looks pretty solid. Let's fix this one as well too. 440.59 was the high on the Qs, and that was from Friday's high. We're not seeing new highs on RSI at all at these new highs, and we'll see if we get any more of a pullback going on that. And then IWM itself just been in this range, trying to break out of this range that we have. We'll extend this out a bit. We'll extend that out to Friday. It's just really struggling with this previous resistance line here, this 200 level. So it's going to bounce around this 200 level a bit. In fact, I'm going to make this exactly 200. More of a psychological level. We were close, and then we're just bouncing in and around here. So you can see just struggling with this resistance level. We pop, we come down, we pop, we don't make it, we pop above. Okay, then we fail below, hit it and don't break it. Then we break it, fall below. We just dancing around the 200. If you're looking at the weekly, the technicals don't look great. If we are seeing the squeeze play start to fizzle out here, maybe a pullback is coming. But the daily, is just sideways trending for right now. I think you just hang in there on IWM. The put call ratio is dropping, which is bearish. Overall, we take a look at the charts here, and we go to the put call ratio here. Continues to drop. As this thing drops below, the markets are bullish. If we can get this thing moving higher, here, then we can start to see the market sideways to down. But right now, as long as the trend is down, the markets are up until this trend really starts to get cooking to the upside on the put call ratio. Nothing going on in here right now. And then the VIX just doing nothing. It's dead down here at 1374. There's no volatility in this market. Even on a day where the market's dropped fractionally, you couldn't get this thing to do anything on the session. If we look at the dollar on the day, pulling back a bit, just sitting right in this triangle pattern that you've got. So you've got a nice triangle pattern here. We can start to extend this thing out a bit. Okay, so you're in this triangle pattern. We'll see what happens. If we break to the downside, you get a bearish PSAR signal, MACD, RSI, squeeze, all heading down. So we're looking at the dollar weakening a bit here. Maybe it resumes this trend to the downside. Right now, you're in a really big, on the weekly, a really good sized descending triangle. Okay, so as we look at this descending triangle, I'm going to extend this out a bit here. This descending triangle we're in, we'll see, do we break below the dollar? Do we break the 100 mark on the dollar? We're a ways away right now, but we'll keep an eye on the dollar. And then as far as the 10-year goes, it was up fractionally today. This thing's just struggling to get any momentum in either direction. It looks like it wants to move higher, which means bonds should move lower. I just don't think we're getting new highs above 5%, but I think, a little more height on this thing might be good. We'll see what happens. We've got all of the moving averages stacked, but MACD is not supporting it, and neither is the RSI. So the daily, while it's drifting higher, not in a big bullish mode, we'll see what happens here as we keep going. Not going to make any predictions on this. If you're following me on Twitter as well, I posted a ton of charts on Twitter. So if you search for me on Twitter and you pull that out, I believe it's in the description down below here on YouTube. Tons of charts, tons of trade ideas are yours for the taking. All right, real quick, ES futures. We've already covered S&P. If we look at oil futures, you're in a bit of an uptrend on the weekly, starting to form an ascending triangle here. Good day today. Maybe we get MACD and RSI starting to kick up, but right now just sideways. I love where we are on oil. If we're looking at gold as well today, gold dropped about 10 points on the session today, but you're starting to see MACD rising. You got squeeze starting to turn around, a little bit of a bullish move here. You do have a descending triangle. We'll see if this continues. Got to give it a few more days. But if we look at the weekly, you've had a weekly bit of a bearish to sideways trend. You're starting to hit a squeeze here, so we could pop one way or the other. Even though it's a little bit bearish on the weekly, this is a little bit bullish on the weekly. So it's really sideways action. You're sitting right at the 21. Perfect strangle weather for gold. And if we're looking at bonds, we already talked about rates potentially going up, which would mean bonds would be dropping a bit. Bonds have been dropping. However, MACD starting to reverse. Squeeze maybe starting to flip if we get an update in bonds tomorrow. If we're looking at the weekly, it's been all downhill for a while. So the weekly trend is down. The daily trend is down, but I think we're finding some potential support in and around these areas. in here. I'm not going to get too excited one way or the other, but I think anything below 114 is a put you can sell, and we did some stuff around those today. If we look at copper as well, pretty good down day on the session today, allowed us to get into some new trades. MACD heading down, squeeze heading up, RSI maybe heading up, and it's up in the after hours, and it's just sideways here overall on the weekly. Really sets up perfect. You get a lot of these sideways trends, which for premium sellers is unbelievably fantastic for us. So the more we can get these sideways moves, the better off we are. We're at NASDAQ. We've already covered the Qs and NASDAQ, so this continues to just march its way higher in here. So we'll keep an eye on that. If it starts to break down, then we'll put some trades on. And then the Aussie dollar, with the dollar dropping, you'd expect the Aussie dollar to start to firm up a bit. It did not do so today, and it's down again in the after hours, but you are in a squeeze. Squeeze momentum seems to be looking up a bit. MACD and RSI a little bit weak. If we're looking at the weekly chart, we are running a bit out of steam. I do like it, though. I think you're close to the 21. I think this can be strangled. I think we can put some 112 trades on. And we did put a trade on in here today. We also did a trade in here on our small account and in our IRA. So we are putting these trades on. I won't tell you which ones. You can join Discord and find out exactly what we got running and how we set it up. And we don't set them up the same every time. So a different little spin on the Aussie dollar, but I do like where we are there. Nothing else to really cover today. We'll wrap it up with you guys, except Apple down, and it does not look super pretty, and the weekly looks pretty ugly. So you're about to break this downtrend or this uptrending channel. We're breaking below. You've got, the 9 below the 21, now below the 50, and you're heading right into crossing this. The Apple does not look good on the daily or the weekly chart right now. Are you going to find some support in here? Maybe. This is a potential support level that you see here. I'm going to draw this across and we'll put this in. I know there's not a lot of lines on here. Maybe it's confusing for you. It is what it is because it's my charts and it helps me out. But you can see we hit it, we hit it, we hit it, we hit it. Will we hit it and hold? Okay. Or will the 5th time we hit this line at 180 be the charm that knocks us below? Right now, the weekly is picking up momentum to the downside. Don't like the looks of Apple here at all. And when one of the leaders is in trouble, the market may be in trouble as well. All right, taking a look at Microsoft. You've been in a bearish PSAR trend now for a couple weeks on the daily, but you're in a pretty nice squeeze. But the momentum's been down on RSI, down on the squeeze, but a little bit up on MACD. So just a sideways movement here. Markets can break trends a couple ways. They can just break the actual trend line, or number 2, they can simply just move sideways and move out of the trend line. If we look to draw a bit of a trend line here, let's get this one on. So if we look at this trend line, we bounced on it here, we bounced on it here, we bounced on it previously down here on Microsoft. If we can break the 21 and the 9 starts to break the 21, this thing could be in a little bit of trouble as well. And if you've got Apple and Microsoft heading lower, that's no bueno. We did post on Twitter today. We posted Amazon. This thing is in an ascending triangle. Tried to break out of it today. Couldn't quite do it. You've got some gaps to fill below. However, this thing could be setting up for a decent little run. You can check out the Twitter, or you can jump in Discord where all of our charts are posted. I review market profile and charts pretty frequently, and Candy is also doing a lot of market profile for you guys in there. All-time highs. We might as well move this thing all the way up to where it is. And Meta just kind of hanging out up here, gapped up. So there is a huge gap to fill. Not today. Okay, on this, we're not going to fill it today. We're probably not filling it tomorrow, but you've got a pretty good sized gap here that at some point may want to get filled on the downside. But overall, It looks a bit weak on the daily, and the weekly is getting super overbought, very long in the tooth. I think a call credit spread here would be a possibility. If we're looking at Google, we've got this ascending triangle as well. Here we can draw it out a bit. You can see that we've been bouncing on it, bouncing on it, bouncing on it. And then today, pretty big down day on Google. So pretty good selling. Things are looking a little ugly on the weekly. Things are looking a little ugly on the daily. So Google doesn't look good. Meta looks okay. Amazon looks okay. Apple and Microsoft don't look good. So Apple, Microsoft, and Google all not looking too healthy. And then there's NVIDIA, which is just beyond the beyond in here. We'll see where this thing comes down to, if it ever does come back down again. But it is super overbought again on the weekly, way above the 3 ATR, which is starting to level out a bit. Let's see if this thing can hold its momentum to the upside, or do we get at least a little bit of a pullback to 700 here? And then if we look at Tesla, this has been interesting. So Tesla's in this triangle pattern that's tightening up. Here you can see that we're getting into a squeeze on the daily with some momentum to the upside. So Tesla could be ready to make maybe to make some noise to the upside. We'll see what happens as it breaks the 21 EMA that's just been fighting with here. The 9's moving higher. So we could be getting some momentum going. Bullish PSAR, never triggered the bearish, even though we're bearish on the weekly. So we'll see where Tesla goes. It's holding up. So Tesla, NVIDIA, Meta, Amazon look decent. Apple, Microsoft, Google, no bueno. They don't look too decent. So we'll see. When you've got a bunch of mixed, I think we just get some more sideways movement. All right, so let's wrap it up for the day. I hope this was helpful to you. If you like what you saw, click the like button as always. Join our YouTube. Let everybody else know that what we're doing here. See if we can help as many people as possible. If you want to join the Discord, feel free to do that. You can use KING as the code, save $50 off the first month on it. Learn something new, learn what we're doing. Come try it out. Just see what we're doing. My guess is you come in, you're going to stay for life. You're going to find so much doggone value in that Discord. You're not going to want to leave. It's a fantastic community of traders with great ideas. We've got a great presenter coming up on Wednesday, trading her small 25K account, showing how she's doing that, following our principles, her trade plan. I can't wait till we go through that trade with Stacy this week. And last week we had another trader on showing how he sets up his data importing from IBKR and TOS into his spreadsheets. Next week we're going to get deeper into some cool spreadsheet stuff with you, and then another trader the week after that. So we got lots of cool stuff to share. You can learn from me. You can learn from Igor. You can learn from Candy. You can learn from any of the others. You can check out what Joseph Puckett's doing, what Eddie's doing, what Stacy's doing, what Rob's doing, what Timur's doing, as well as hundreds of other traders sharing their plans, and a great plan shared today as well. Really love what we're seeing from some of our members, but pretty cool spreadsheet today from one of our traders. Really cool stuff. I mean, that's just the price of admission right there. All right, so come and join what we're doing. New all-time highs. Kicking the market's butt. We're up 11% for the year already. And sky's the limit, folks. If you trade your plan and you plan your trades and you stick to your metrics and your risks tolerance, and you hedge what needs to be hedged, and you're smart about what you're doing, you can absolutely outperform the markets. All right. Have a great rest of your evening, everybody. Take care, and we will see you later on. Take care. Bye-bye.